you're self-employed, the bank typically want to look at something like 3 years history. So the recent 3 years financial statements that you might have. So that's the thing that they look at. Obviously, if you're going to look in a year's time for property, then obviously whatever was applicable in that year. So if you only start picking up business again in this last year, that's also, it is what it is. But preferably they would want to see a 3-year track record. And that's the first thing. I mean, obviously then according to your, especially with self-employed, your average income for the year would be kind of what they will look at. And also, I think both of you, potentially the income would go through the bank. So obviously there would also already be a track record and scoring at the bank because of the money actually goes through the bank. So I'm just kind of mentioning a few things that I think that might be applicable to you. And then obviously also just very careful that there's no debit order. I mean, sometimes it happens, but that no debit order bounces purely because of timing of the month of the debit order, whatever. But if that goes through, it's kind of take you a few months back. You got to start building a record again. So this kind of just the crucial things. And then regarding the bond application, so generally when it's a first-time buyers, we recently got a bond through for a first-time buyer at 105%, which is kind of so rare, it's kind of almost impossible. But so that's been improved 105, which means that they no deposit and also the attorney fees. I mean, not the transfer duties for SARS, but the rest is there. So that is potentially possible if it's a first-time buyer. But obviously with the bank and with the interest rate coming up now as well, the risk that will most definitely affect the appetite of the banks regarding their risk as well. So we use obviously 2 different bond originators, one for the various kind of the main banks, and then also one dedicated at SA Home Loans as well, getting good results through them. SA Home Loans love primary residence, so they like residential primary residence applications, and also very equipped with self-employed. So that's typically a lot of our clients get help at SA Home Loans first, because that's kind of just their market. They generally go up to 85%. So 15% of whatever you're looking to buy would be a cash deposit, and the rest would be. So I would prepare myself potentially. I mean, you have enough time that, I mean, you're planning ahead, which is awesome. So I would suggest you look at something like 20% deposit when you're ready to go. That's always good if you can give the bank some cash upfront as a deposit, because that'll just influence and create a little less risk for them as well. And then lastly, the cost involved. So obviously when it's a bond approval as well, so that you have the transfer duties that you need to pay, the transfer cost of the attorney, you have the bond registration fees also of an attorney, and then you have the transfer duties that you need to pay with SARS, and that's on a kind of a scale, so I can send that to you as well. But that's something that sometimes court people, they have approval, they're very happy, they get the transfer fees, and then they forget about the transfer duties that they need to. And then lastly, just on that transfer duties, when you buy from a developer, so it's a new complex, a new development, generally there's no transfer duties, because they obviously have a VATable sale that they didn't do. So they pay over the VAT to SARS, and then there's no transfer duty applicable. So that's generally for first time buyer don't want to put a lot of cash into the mix. That's generally the best option is to buy into a new development, either VAT or transfer duties. In that case, there's this VAT that they need to pay, and so there's no transfer duty. What I would suggest, when you obviously you mentioned about 2-3 years from now, but when you at any point when you feel like you want to kind of see the structure and what you can actually get approved for by the bank, we can prepare something for the bank, and SA home loans are generally be able to get a pre-approval, at least in kind of in principle, in kind of this is your income, this is what we will be happy to provide you as finance, and in one principles, like in deposit, interest, and all those kind of things. It's always a good exercise to do before you go, because then you comfortably can go on weekends and go look at shower houses, and you know where you can actually go look for. So you might think you can afford 5 million, but you can only afford 3 million, whatever the case may be. So then at least it's a good reality check, and also you can go directly to the right properties that you know you're happy with, and you know the repayment amount and everything.
Hi, Jasper Basson here. I just wanted to remind you about the Daily Entrepreneur Tips series. It's a business growth series for entrepreneurs and contains financial information and also information to grow you as a person and your business, because we will never grow our business any higher than we grow ourselves. So click on the link below and I will send you daily information to grow you as a person and your business, and it's for 365 days of the year.